Hello everyone. I hope everyone is enjoying a nice fun week of big tech ERs. Today, Thursday, is our kind of final big push of ERs this week. We do have some oil names reporting tomorrow on Friday before the open. This will be a shorter video this week. Not much has shifted from last week's video or structure. We've been balanced throughout the week. So we can just do a quick run through. But yeah, like I said, go review last week's video. Nothing has really shifted in terms of how we want to approach the levels, as well as where our current value is being held. Really kind of quick and dirty run through here on ES after the Google report and Microsoft report today. We saw this first kind of after settlement time push up into our sell side value from this 51.10 through 51.25, which we spoke about last week as well. You still need to see a strong look through this low volume node and retest into this previous March structure for any type of significant reversal. I do expect to see some sell pressure overnight and into the AM session, with 5100 still being your primary weekly pivot here. If we can hold this, you want to look for a higher high and trade very quickly through this low volume node. Those remember from last week, I was not too concerned about this LVN on the way back up. I think if we do build this area out, we'll see tests back in to our March structure, and then liquidity kind of grabs and quick trades in and out that will build this out if there's any value found here by higher time frame participants. So that's kind of your upside. If we get into this March structure, we do have really good node structure above, with 5200 being your kind of main area of contention. We saw this was quite supportive earlier in the March and started putting in lower highs before our big retrace. This balance and kind of rest from the sell makes sense. We'll go look at some higher time frame charts as well at the end here in terms of daily and weekly structure. This was a orderly and pretty average size downside rotation. Nothing too panicky. It is larger than we've seen recently, but in the grand scheme of things, nothing out of the ordinary. And this retrace makes sense just statistically based on about a 6% retrace into 1 to 2% kind of balance and pop back up. So it is going to be important for buyers for any sustain to clear this LVN and get back into March's primary structure. To the downside, we did talk about this 5100 area being your primary pivot for the week. Below that, this edge at 5080 is kind of your secondary pivot. Can we hold this primary 2-week balance, or do we put pressure down below? Any trades through 5080 should see 5040s trade. We've seen this rotation happen twice already this week and last week as well, right? We were unable to get over the edge. And then as we do get over the edge and hold, we see that full 40-point rotation. Below 5040, 5020 is your kind of primary buy-side liquidity pocket here. Another like very standardized node play where it was sell side and has turned buy side. And we understand all of these aggressive sellers into the low are still trapped, specifically after the test this morning. Below 5020, it makes sense to chunk all the way back down into our 4970 area. We talked about this VPOC quite extensively in previous videos. I would not be surprised if we do see a larger degree rejection here and into next week to take out this low and trade closer down to 4940. Below that level, it's a pretty big stretch until our first area of untested value down into 4883, and then continuation into 4830 being the primary look down in this area. I will zoom in just a tad and we'll pull this over so we can see just December, January, pretty large kind of like balanced area. With a POC shift before this last final move, and then pushing us up and out. So both this 4830 and then the subsequent very similar structure where we have well-defined buy side value, get put in at 48.80 before our next leg up and move. So we chunk down, retest these kind of areas, test if participants still view this as value. I don't expect a ton of like big movement tomorrow, really. Like I said, we can see continuation and look up. First test, I would expect sellers to be quite aggressive in this area. If we're unable to clear over our sell side value, we just look for retraces through balance with, once again, 40.80, or excuse me, 50.80. We're not talking about the lows anymore. 50.80 being your kind of primary area. No trade, no buy side activity there. We can look to 40 and then a break and push into liquidity into 20. That's basically it for kind of our hourly chart here. Like I said, go look at last week's video as well. Go into a little bit more detail on some of these areas, but nothing has shifted in terms of pathing or the principles of value shifting here. I do want to take a quick peek over into our daily chart here. What's on the screen is this white is our 20 DMA. So our 20-day moving average, with a 2% and a 4% envelope, an extension off of this. This is represented the same way, just a -2 and a -4. With this kind of, like I said, the sell last week that we saw, or over the last couple weeks, seemed a little abrupt because we haven't had one recently. But in terms of degree of move and shifts, this is quite normal. And I want to go look at October really quick. We did put in our low and see how that sell progressed, as well as what actually put in our bottom. So we can see since our October low here, let me get the chart situated so we can see everything quite clearly. It was very similar, right? Holding above 20 DMA, riding it up 4%, about the point where we'll see mean reversions back towards our 20 DMA. The second we start to kind of reject it and trade below, we get this -4% extension. We ride this band down. We do get tests back into the 20 DMA, then a really abrupt retest to our -4%, which puts in our bottom, right? Don't utilize these lines and levels as buy or sell signals. Okay, we still need to rely on our intraday order flow and the current order book to make these decisions, as well as our structural setups via value and volume profile. What this is more telling me is, okay, at what point is an extension far enough away where the probability of a mean reversion trade becomes higher? Right? And as we get into these extremes over a 20 DMA, especially when looking at it in, a weekly basis or a 3-day basis, it makes sense to see these mean reversion trades back into previous value and structure. So if we look at our current downside rotation, yes, we rode our 20 basically all the way up. We have since this October low. Nothing out of the ordinary, nothing crazy here. We see our test and kind of failure of the 20 DMA, and last week into the low we do get our -4% extension test. Now this week being more bullish in nature but still balanced in terms of value, we've came back to this -2 and up towards our 20 DMA, which is sitting at this 51.72, 51.80, somewhere in there. If we go quick look back into our structural chart, where is that? Well, it's just the top of this bottom little distribution in our March structure, right? We talked a little bit ago about looking up into 5,200. So we do have confluence just based on mean reversion here of this structure as well. If we get this 20 DMA test and a really strong rejection and sell out, we can look for that larger degree rotation over the next handful of weeks into our -4%. This chart is helpful to understand, is this move greater than, or is it in line with what we generally see rotationally and mean reversion wise? And this move so far in both directions, both downside, is definitely acceptable, as well as to the upside, right? This is just a fine little retrace and balance. Still, rely on your structure, and intraday trading, we need to be relying on our order flow and offside participants to find these reversion areas. But understand everything in the moves is fine, makes sense. The last little peek that I want to do is go talk about the Russell here. I'm going to take a little different look. We're going to take our 20 EMAs off here. And I just want to zoom in on this structure. So with our yearly structure here, this is a very, very balanced node. We saw a look back down last week, right out of our primary kind of 2024 balance here. A look really significantly below that was instantly bought up. And we are once again just balanced in our primary distribution here. If we get that look on ESNQ above and into March's structure, what does that look like for RTY? Well, that puts us about at this 2020 level. You see end of February, beginning of March. This balance on RTY is equal to this ES balance. So you would expect this to lead and or trade with if we're going to have significant strength. Now understand this 2020 becomes important on RTY, and if you see downside rejections leading, it's a lot of pressure on sellers to kind of take control once again in ES and NQ and put pressure down into these lows. So because the structure is so balanced and value is so well determined on the Russell, it generally trades in a really, kind of oscillating form. Pay attention to that level. That's basically the last thing I got for you. Make sure to come check out the live streams while we're trading intraday. 3 days a week. They're free on YouTube. Come hang out. Come ask questions. We do commentary, and we're here to help. So enjoy the Friday trading and your weekend, and I will see you guys next week.